Well, over the weekend, the nation's governors met in Biloxi, Mississippi, to discuss the well-being of their home state economies. But there is a lot of concern about budget deficits, the ability to take on the economic crisis on the state level, and what impact is that going to have on municipal bonds? Well, we're turning to one of the leading experts here, Alexandra Lebenthal. She's president and CEO of the nation's oldest municipal bond house, Lebenthal Company. Thank you so much for joining us in studio, Alexandra.
Thank you. Great to be here.
Of course, when we look at what's happening on a state-by-state basis, there's a lot of concern about health care. There's a lot of concern about being able to take on the unemployment costs that are mounting state by state. What's the trade on that? Is there true concern about default when you look at some of the municipal bonds at the state level?
You know, it's interesting. If anything, over the last couple of years, I've learned that you cannot say something would never happen. Yet, at the same time, the concept of a state like California or any other state being allowed to default on its debt, to walk away, is still unconscionable. That state's still going to be there, unlike a company which can go into Chapter 11, liquidation, etc. There is still, though, very significant concern. There are 47 states that are facing budget deficits, a total of $350 billion. California alone is $26 billion in terms of its deficit. Obviously, everything that's going on in the economy, whether it's CIT and small businesses, whether it's, what's happened on Wall Street, everything is affecting those state budgets. And we have state income tax revenues down 11%. It's enormous.
There was headlines out last week about Illinois and Moody's, looking at potentially downgrading their credit rating. Are there opportunities in here? Because the attraction with municipal bonds has been, them being tax exempt. Right. So are there still buying opportunities?
There are always buying opportunities. I think the thing that has changed over the last couple of years is that there used to be sort of less concern about what was going on, what the volatility was going to be, and now, if you're looking at a California bond, when the situation is so fluid, you cannot necessarily say, well, this is it, I'm not going to see significant fluctuations in price. And we're clearly, with California, not out of the woods on that. The other thing that's different is we don't really have bond insurance anymore as something to say, well, it's insured, I don't have to worry about it. In some cases, you have bond insurance companies that are rated less than the state itself. The tax-free implication, though, is enormous. It's fantastic. And as we all know, taxes are only going one way at this point, and that's up. So when you look at a tax-free return and figure if you're going to be in a 50% combined bracket, right, then it is an incredible return.
Is that really the selling point these days? Is it the tax story and what might happen under the Obama administration? Or, what's happening on the inflation front and the reversal of what we had seen happen during the crisis in terms of yields?
The tax story is really the biggest one. And even with the concerns about fluctuation in yields, there still is you getting your money back at the end, which, as we've seen again over the last couple of years, seeing blue chip stocks go from $100 a share to 20 cents or nothing, knowing that you're going to get principal back is very significant. And then, of course, there's the income along the way as well.
Because default not necessarily mean you're not going to get your money back, just you might not get it back when you expect to.
Well, yes, that's a great point. And, a couple of historical points to look at. New York City, crisis in 1975, where notes were essentially put on moratorium and then told they had to pay, created MAC bonds, which became very successful. In the Great Depression, of all of the cities of 25,000 people or more that had some sort of halt on their payment, they all ended up paying in some way, shape, or form. Again, you're not going to see a town, a state just say, that's it, we're not here anymore.
Thank you so much, Alexandra. And definitely, we'll take a look at the further impact on municipal bonds as we cover the state-by-state crisis.